Today I'm going to talk to you about a popular Section C topic. So this is the difference between partnerships, limited companies, so business organisations, particularly looking at, in this case, going from a sole trader to either a partnership or a limited company. So without further ado, we're going to use the Jasmeen question that came from paper 1 in June 2019. So Jasmeen, she's a sole trader who runs a successful kennel business. She's now looking to expand this business with an extension to her kennel building in order to meet demand. Demand is seasonal, with summer being her busiest period, but the business suffers from poor liquidity in the winter months. Discounts are given to clients who use her services regularly. The kennel extension will cost around £150,000 to complete. The extension is expected to be in use for around 20 years and should be completed in the winter of 2019 if she can secure funding by the end of August 2019. So a reminder that this exam was set in June 2019, so quite a short time frame there. She hopes it will boost her profits by between 30 and 60%, and she supplied you with the following information. So we've got the 2018 and the 2017 figures there for comparatives. So capital employed, 231,500 compared to 223,000 the year before. A reminder that capital employed is going to be, in this case, because it's a sole trader, Jasmeen's capital account balance, but it may include some non-current liabilities as well. We don't know, we're not told that information. Her drawings for the year were 26,000 last year, 24,000 the year before, and profits look relatively stable, 34,500 last year and 33,200 the year before. It tells us that she's prepared to take some risks in order to see the business grow, and she's considering whether to change the business ownership in order to fund the expansion. Okay, so let's have a little look over the page. She feels that the two most suitable options are detailed below. Option 1 is to enter into a partnership with Depak's doggies. Depak is looking to invest £150,000 for an equal profit share. He's already pointed out some ways to improve the business, including using cheaper dog food and reducing the amount spent on wages by walking the dogs less frequently. The other option she's considering is to set up as a private limited company, so not a PLC. This is not going to be a massive thing that's going to float on the stock exchange. It's going to be a small private limited company. And to do this, she would sell ordinary shares in her company at their nominal value of 50p a share to raise £150,000. So that's what she's going to sell to people. Her own equity, so that will be her capital that's already in her business, would be converted into shares to the same value. So presumably £150,000 worth, 50p shares, so 300,000 shares for her, 300,000 shares for other people. So she'll own 50% of the company. And then it tells us that she's hoping to pay dividends at around 5p per share. And what we've got to do is evaluate which of these options Jasmeen should choose and justify our answer for 25 marks. Okay, so let's have a look at how we're going to do this. So we've first of all got to identify the problem. So she needs to expand in order to meet demand. She needs £150,000 to do that. It needs to be done by August so that she can commence the building work and get it finished over the winter. It's currently June, so 2 or 3 months to get that money in place. Profits should increase by 30 to 60%. They're currently 34,500. She is prepared to take some risks, and the two options are to enter into a partnership or set up as a private limited company. So those are the things that we need to consider in order to make a recommendation to Jasmeen as to what she should do. So first of all, we've got to do some calculations. As I said before, there is the one example, I think, in the whole of the new specification where we didn't have to do any calculations. So they are expecting you to do some calculations. So we've got some numbers given to us in terms of profits and the likely increases and so on. So we can start looking at that. So what would the future profits be? Current profits are 34,500. If we increase those by 30%, which seems to be the minimum that Jasmeen is suggesting, that would take it up to 44,850. If her profits go up by 60%, which is the maximum Jasmeen is suggesting, then her profits would go up to 55,200. But she's going to have to share those with Depak if she goes into business with him. So if we divide that amount by 2, that means Jasmeen's share would be 22,425 or 27,600 at the upper limit. Now, both of those figures are lower than her current level of profit, so that's something to consider. This one the 22,425, is also lower than the 26,000 of drawings that she took last year. So we could do the same for limited company. So if you remember the limited company, she was thinking about paying a dividend of 5p a share, and she's going to need to sell 300,000 50p ordinary shares to raise the 150,000 that she needs. She's going to get another 150,000 pounds worth of shares, so she'll get 300,000. That means there'll be 600,000 in total. So if we pay a dividend on those, 5 pence per dividend per share, that's going to mean that dividends would be £30,000. But remember, she only owns half the shares, so Jasmeen will only be getting £15,000, which is a lot lower than her current drawings, certainly a lot lower than her current share of profit. But there might be something else to consider here. Will she be paid director's remuneration? Presumably, it doesn't tell us this, but presumably she'll be running the company and will pay herself a salary. But that's one of the limitations we would need to ask Jasmeen, because £15,000, if that's all she's going to get, would be a bit of a non-starter, I think, for her. Right, so we've got to weigh up the two options. We've done the basic calculations, and now we're going to weigh up which of those we're going to take. So we need to look at the pros and cons of each of them and think about any other factors. Think about what else you'd like to ask Jasmeen, or indeed Deepak. I think I've spelled his name wrong there. Apologies to Deepak. And remember that you need to demonstrate a logical chain of reasoning. So we need to get some balance, hence the scales here. So we need to weigh up the two options, pros and cons, and make sure we've kind of ticked a box for each of those. We've mentioned, hopefully a couple of advantages, a couple of disadvantages for each of the option, and then highlighted a couple of extra bits of information that we would like to see before we give a final decision. So, main pros and cons then of the partnership. So we'll start with the advantages. Obviously, if Deepak comes into the business, we're going to have a new partner to share our workload, provide cover for holidays and sickness, share the burden of running a business. Deepak may be able to bring new ideas and expertise. Now, obviously, we've had one of those ideas, or two of them mentioned, about cheaper dog food and fewer walks for the dogs. Might not be such a good idea after all. He will hopefully bring his existing customers. I'm assuming that Deepak is a competitor to Jasmeen, although it doesn't say what geographical area he's operating in. He may well have negotiated some good discounts with suppliers, which could help reduce costs, so he might be able to bring those into the business. On the disadvantage side, there's going to be obviously an increased chance of disagreement. If it's just Jasmeen running the business as a sole trader, there's no chance of disagreeing. Whereas if we bring Deepak in, we're going to have to start making some concessions and take on board his ideas. So will Jasmeen be happy to feed cheap dog food and take dogs on fewer walks? Deepak's cost-cutting ideas may not prove popular with Jasmeen's customers. They're used to a good standard of service, presumably decent food and plenty of walks. So she may end up losing some of her existing business if she changes the way she operates. She's going to have to share her profits. That's the most obvious one. And I've already mentioned the fact that the profit share would be lower than her current level of drawings, and certainly lower than the profit she's got. Okay, we can do the same then with the limited company, main advantages and disadvantages. So first of all, she's going to have limited liability. Obviously, that means that the company is a separate legal entity. So it reduces risk. It means that her personal assets aren't at risk. Although it does mean that she can still lose the money that she's put into the company, and £150,000 is not an insubstantial sum to lose. So if you remember, shareholders can stand to lose all of their investment if the company fails, but personal assets are protected. So I'm not sure how much of a major consideration that's going to be for Jasmeen. She's not averse to some risk, so that might not be a problem for her. Jasmeen will still have control with 50% of the shares, unless just one person buys all the other shares, in which case it would be 50-50. So nobody would have overall control, which might not be a good thing. Share capital is permanent. It's a permanent method of finance. It doesn't have to be repaid. Dividends are variable and optional, but once you've got shareholders on board, they are there. They're a permanent feature. So going forward, Jasmeen will always be sharing half of her profits, with her other shareholders. Limited company status might bring some prestige, might give the impression of a bigger business. That might be an advantage for her. On the disadvantage side, who is she going to sell these shares to? She's got to sell 300,000 of them at 50p each. I think that's quite a lot. So remember that it's not a PLC. She can't advertise this and float on the stock exchange. She's going to be selling these shares to family and friends. So does she have that number of people with enough shares? I mean, maybe she could consider selling to Depak. That might be an option. Her anticipated dividend, £15,000, is going to be lower than her current level of drawings. Obviously, with companies, we've got red tape, bureaucracy, the expense. Her personal information is going to be available to the public. So there's all those regular disadvantages. This isn't really proper evaluation. This is just kind of stating the obvious stuff. So that would only get you AO2 marks. And remember, there's only 5 of those available. As would, the idea of appointing directors, holding meetings is going to be time consuming, potentially costly. And then we've got the idea that shareholders with voting rights may try to influence the way the business is run. So she will have to have annual general meetings, present the accounts, potentially take their ideas on board. So having weighed up the pros and cons of both of the options, we now need to think about what limitations there are to the data. So what don't we know? What extra information could we do with? What would we like to ask Jasmeen? What would we like to ask Depak? So with regards to the partnership, what are Depak's motives? Why does he want to get into partnership with Jasmeen? Is it because he wants to expand his business and he thinks that they can work together? They've known each other for years, they're great friends. Or is it that he's a competitor and he's thinking, actually, I can go into partnership and ultimately get rid of Jasmeen and take over? How much time is he prepared to spend running the business? That's a consideration for Jasmeen. Is he going to put the money in and then expect her to do all the work, would be my question. Does Jasmeen think that she can work with Depak? Does she know him really well? Has she got any concerns about him as a person or as a business partner? Does Jasmeen's capital employed of 231,500 include any non-current liabilities? If it doesn't, and it's all her money, it's all representative of her capital account, she's going to be having more capital invested in the business than Depak, but only half the profit. So she might want to consider whether that's fair, whether they can sort some sort of arrangement out with the partnership agreement, maybe allow for interest on partners' capital, something like that to make it fairer. But we can ask the question. With regard to the limited company, there's not a lot really here that we can pick out as a limitation, but will Jasmeen be paid a salary is the obvious one. She's going to get some director's remuneration in addition to her dividends, because £15,000 probably isn't going to be enough for her to live on. Is there going to be enough time to sell the shares between now and August, June and August, 2 or 3 months' time? Quite possibly not, but she might know some people that are prepared to invest. That's another one of the limitations. Does she know enough people to sell all these shares to? Has she considered any other options? Could she borrow the money instead? So those are all things that we need to ask really, and just highlight in the question as limitations to the data that we're given. Okay, so we've weighed up the options, we've identified the limitations, and now we've got to make a decision. So we've got to advise Jasmeen, should she go into partnership? Or should she set up as a limited company? So there's no right or wrong answer here. Just make sure that your advice is clear and justified, and don't make sweeping statements that contradict each other. Don't say things like she should go into partnership because she should set up as a limited company because. When you're talking about the evaluation part, you should be saying things like, one of the reasons she might want to set up as a partnership is, and a reason that a limited company would be a good idea is, and go about it that way. And then at the end, make your clear statement there. I would advise Jasmeen to set up as a partnership because she'd be gaining Depak's expertise, and you could talk about that, or make a statement to say that Jasmeen should set up as a limited company to protect her personal assets because you think that the limited liability would be worth having. So, just remember, there's no right or wrong answer. But just make sure that your advice is clear. If you're in danger of running out of time, or you often forget to do the advice bit, remember that does limit you then to level 1, which is a maximum of 5 marks. So we don't want to be doing that. Then put your advice in at the start. So read through the scenario, work out what your advice is going to be. Stick that in right at the start. I advise Jasmeen to set up as a limited company because blah, blah, blah. And now I will go through, a full evaluation of both options and do it that way around. Do it back to front. It doesn't matter. Avoid bullet pointing. Make sure that you use those connectives I talked about in the last video to talk about cause and effect. So if she does this, this would happen. Have a practice, and you can look at the answers. There's a link in the additional information so that you can get a copy of the question and the answers. If you enjoyed this video, don't forget to like and subscribe, and I'll see you again soon. Thanks for watching.